Okay.
We
Yeah.
are live now with Structured Research, our research show at Big TV, where we try to look at what all these different banks and brokers are telling their clients, maybe their most preferred clients. The idea is we're able to help you make better decisions, maybe by knowing what the pros know. So this has been like hidden behind a sort of a almost like a curtain where it's been preferred knowledge and then there's been everyone else. And in the last few years, something has happened. So, do you remember back in the day when? By the way, good morning, Michelle.
Yes,
or
morning.
so you can introduce yourself for people who don't know you. But
Yeah, so I'm Michelle Walfels. I'm based in Geneva, and I tweet under the handle Sardonic X.
yeah, well, you also do a little bit else. Than you don't actually. You actually do have a job.
I do have a day job, yes.
yeah. So you invest in. You're in a
In
family
hedge
office, right?
funds, in
Yes.
hedge funds primarily,
Yeah.
on behalf of a couple of high net worth families, and I also sort of manage a small tactical portfolio,
Yeah.
which is like composed of best ideas that we hear from the hedge fund managers that we're invested with.
Cool. Would you short Norwegian housing if you could?
I have absolutely no opinion on sort of Norwegian housing. I pulled this out from the morning's research because obviously we have like a lot of viewers in Scandinavia, and I know you're interested in Norwegian housing. You've been quite sort of vocal about
Yeah.
renting versus buying. So I thought it would be interesting to have a look.
Yeah. Let's get right to it. So the topic today, we're going to look at two things. We're going to try and be a little topical here. So the two things is first Norwegian housing, which has been booming like no other, almost no other market in the world for the last well, since I was born, pretty much. and it looks like it looked very topish. And the second one is going to be gold. So just going to get right to it. And we have a report from Goldman Sachs, one of the possibly the most important bank in the world, that came out this morning. And you pulled out a little chart from that.
Yeah, this is the European Economics Daily report from Goldman Sachs. And it's not really a very gutsy call because, they're calling attention to the high valuation levels, but they say it's going to be sort of a soft landing.
Yeah.
So that they're not expecting any kind of major sort of correction. And, they're hedging themselves fairly well sort of on either side.
Yeah.
But
But you
it
can
was
see
really
what
more
they're
the
doing
charts that
here.
were sort of kind of interesting sort of for
Yeah.
me.
But you can see what they're doing here, though. I mean,
Yeah.
this is a fairly bearish call, but you don't. It's a very unpopular call because everyone of their Norwegian clients and everyone is in the housing market. So, I mean, but they have to be. They have to say something, I guess.
Yeah. So this is Norway relative to Sweden and Denmark. And it's just kind of interesting to just look at the massive outperformance of Norway sort of relative to its Scandinavian neighbors
Yeah.
over the past few years.
So what I've seen is what you don't see in this chart is the next level. And this morning when I was walking my dog, two of my neighbors were selling their house
Oh, yeah?
next to each other, and I know they have real problems moving it. And
Yeah.
another friend of mine bought a house the other day, and he said he saved 500,000 kroner just for
Oh,
waiting
wow.
a few months. So
Yeah.
something has happened in the market, and I don't think we fully see that reflected in the charts yet. But it's become a buyer's market after years of struggle. And,
Sure.
but what do you
Sure.
think that is? I mean, is it just money has been so cheap for so long?
I think so. I mean, low interest rates everywhere have encouraged people to lever up. I mean, you see the same thing sort of here in Switzerland. I mean, the cost of a mortgage, relative to 10, sort of 15 years ago, has just come down incredibly.
Yeah, but you do have some in Switzerland. You have some things to prevent bubbles, don't you?
Um, yes and no. I would say, traditionally this has been like a renter's market, not sort of a buyer's market.
Yeah.
And people, I mean, banks generally sort of don't lend above 80% of the house's value. So yeah, there are kind of built-in mechanisms to sort of slow down any kind of bubble.
Yeah.
But even here, sort of the central bank is like quite concerned.
Yeah. And speaking of renting level, I'm just pulling up another chart from the Goldman stack. It's the rent and house prices have diverged in Norway. So we've seen since 78.
Yeah. Now this is relative to income.
Yeah.
So you have like income levels on the left-hand scale.
Yeah.
And yeah, so what this is saying is that house prices are an ever greater sort of percentage of a person's income, and whereas rental yields are going down.
Yeah.
And so, I mean, there are sort of two ways to sort of read this. First of all, if you just look at sort of house prices relative to income, you might think, oh, this is a sign of like a huge, bubble because housing is like so expensive versus what people earn. But if you look at the trend in rental yields compared to the trend in bond yields, I think that's the next chart.
Is it this one?
It's like the third. Yeah, that one. That's right.
So rental yields have fallen sharply since the 90s, but so have bond
Exactly,
yields.
but they've been closely correlated with the fall in interest rates.
Exactly.
Yeah.
So this is kind of interesting because we're touching upon something deep in finance now. That it's been if you look at any yield chart, if you drag it out far, it's always just every chart is sloping towards zero. I don't know if now is the time for this trend to end. I don't know. This is just one of the many factors.
Sure. I mean, that's one of the points that Goldman is making, is that if housing prices in Norway continue sort of to rise from here, they're perhaps going to enter sort of into overvaluation sort of territory, because there's not really sort of room for interest rates to fall any further.
No. Yeah, that's interesting. Yeah, they're at zero now, so. Or very close.
Exactly. And of course, I mean, they're hedging, they're calling for a soft landing, they're not predicting sort of a crash, but they do say that in the medium term, there are downside risks, and basically sort of from interest rates.
Yeah. I think it's ultimately there's a lot of reasons to be
it may
skeptical.
it may not be the preferred scenario that there's going to be a sharp rise in rates, but if there is, that would have a negative impact on housing.
Yeah, but it's also a sentiment thing. I mean, housing is so sentiment driven. If the public broadcast, if the national broadcasting channel or the biggest newspapers would run a story, it really does affect how people make decisions on housing, because you have to make a bet ultimately if you believe in the future or not. And
the more interesting question, I think, is like what happens to consumption if housing prices sort of start to come off and people sort of feel sort of less wealthy, and what happens, what are the kind of the wider sort of implications for the economy.
Yeah, I have a question actually.
Yeah,
that a friend of mine asked. A rhetorical question, I guess. It's a really good one. How on earth are all these boats out here in the harbor financed? Like, where is this money actually coming from? And I want to add a caveat to that. It's like, where are all these like 6,000 kroner or $800 or $1,000 jackets? How are they financed? And I'm willing to bet that a lot of consumption you see on the streets, because there's so much wealth, there's so much luxury items, especially here in Norway. People aren't that rich. People mainly work in like government jobs, and so the perception is that Norwegians are very rich. But in general, anywhere you go, you see very expensive items. Anyone who's skiing has equipment for 20,000. But how is that actually financed? Because most people don't make that much. So I would bet that a lot of this is like this hidden credit. And it's all about financing your house, and that's a much scarier sort of outlook if that would turn, I would guess.
Sure, sure, definitely.
Yeah, we don't really have any historical ground to.
What's the percentage of home ownership in Norway?
Oof, it's got to be high. I have to check.
Yeah.
Oh, it's everyone. It's they run storage. I have to Google that.
Yeah. I know sort of, I mean, Switzerland and Germany sort of traditionally had one of the lowest rates in the world. I'm not sure sort of what its,
I have a chart
what the
here,
sort of
by the
current
way.
figures are.
I have a nice chart over it. So this is
Okay.
Wikipedia, of course. So I don't know. Norway is the 16th highest, 77%.
Okay.
So Spain is above, but Bulgaria, Lithuania, Macedonia, Hungary.
Yeah, yeah.
It's interesting.
Mm.
And there you see on the. What did you say about Switzerland? They're
Where
not even
is
on the list.
Switzerland on there? And Germany?
Germany is very low. Shouldn't it be 35? It's 43% for Germany.
Yeah,
That's very low.
yeah.
I'm not seeing
Yeah.
Switzerland here, but yeah, it's. I mean, here home ownership is perceived as a human right.
Right.
But I guess it's in Sweden. It's about rentals, but it's just.
I'm surprised
interesting.
Switzerland isn't on there.
No. Well, I
Yeah.
mean, I don't know if they have the stats, but let's go to our next topic, gold. And my idea was to do a story making the case for gold, because I mean we've talked in the past about gold being maybe on a turning point because it's so incredibly unpopular, and the fact that you are mocked in the same way as you were in 2003, 2004 if you brought up gold now. What do you
Yeah.
think?
Well, what I find interesting, sort of, you know, and I mean, I read the research issued by anywhere up like around sort of 10 different sort of banks and other sources, and certain sort of themes you see them sort of repeated like over and over again. And just in the last week, especially this is with respect to technical analysis, in the last week I've seen just a number of notes talking about you know, short-term sort of breakouts in gold. And you know, of course, I'm not a chartist, but when you sort of start looking at some of these charts, you see sort of what they're noticing. I mean, basically, sort of gold has been in a downtrend pretty much since like the second half of last year. And we're starting to see sort of a pickup in interest. I mean, I think gold was one of the best performing asset classes in January, if I'm not mistaken.
Oh yeah,
Yeah.
it was huge. It's one of
Yeah.
the. I had the chart. I can bring it up. I had it with
So,
Ed.
so I mean,
previously.
nobody is like calling for a you know, new bull trend in gold, but they're all sort of pointing to signs of perhaps like a short-term rally.
Yeah, I would say that when you look at gold, it's such a sentiment play more than anything. So you
Yeah,
have
maybe.
you have a bunch of like real things you can focus on, but you can also just focus on people, and I feel like the last seller has sold, and they can't get any more bearish, the analysts, and
Yeah.
yeah.
I think it's also, I mean, perhaps these two things are like completely sort of unrelated, but I think it's kind of interesting that interest in sort of gold kind of dropped off as interest in Bitcoin was was increasing. And you know, of course, I'm not saying that it's the same sort of investors involved in both gold and Bitcoin,
Yeah.
but maybe, you know, there's some overlap, and who knows?
It's a very unpopular,
Yeah.
but everything is unpopular about this. That's why I like it. But let's we have some charts here on gold. I really like the gold bug index. We're gonna.
Yeah, I didn't know this index at all, and
Let's start
this
with
is from UBS. UBS every week they issue this technical analysis research piece, And this came out. This is from the 11th of February, so the figures are a little bit old. This gold index is now around 240 levels.
Yeah.
But this is like UBS technical strategist top sector pick for 2014.
Long gold?
No, long this index. So this is an index of gold mining companies, but more importantly, it's gold mining companies that don't hedge their production beyond 1.5 years. And I haven't. I was just quickly looking this morning to see what kind of ETFs were available, sort of to play this, and there are a couple that mirror sort of the index a little bit. There's nothing sort of that's like a pure play on the index, but basically gold mining companies.
Yeah. So when they say gold
they
bug,
trade like gold, but like on steroids.
Yeah. But that's been the classical. I never understood why people do invest in this. Can you explain why you invest in a gold mining company? Because it seems like an added risk, isn't it?
Yeah, I mean, I don't invest. I've never invested in gold mining companies, sort of either. I think what people sort of look at is like, there's often like a time lag between moves in the price of gold and moves in the price of the miners. But they're very, very difficult companies to analyze. You have to look at things like their hedging policies. You have to look at, like a whole host of factors.
Yeah.
So it's not always the case that being bullish on gold necessarily sort of translates into bullish on gold mining companies.
Yeah, there's a number of famous Norwegians who's lost billions on exactly this, and it's like operational risk, market risk, all these things that you add on to.
Exactly. It's like being sort of bullish on commodities and buying, or being bullish on oil and buying sort of oil company sort of stocks, or Exxon or Total or something. It doesn't necessarily sort of correlate.
Yeah. How you have a equity long short fund?
Yeah, these are two other charts from UBS, and sorry, no, not this one. Show the other, the GLD.
Oh yeah, this one.
No, that one. Yes. So this is like one of the largest gold ETFs, the GLD. And this is just showing, this is just a chart over the last sort of 12 months, showing the number of ounces of gold sort of held within the ETF.
Yeah.
And so I think
it's incredible, though.
Yeah,
that is really incredible
sort of
how much gold has fallen out of favor. This is the best,
absolutely,
possibly the best way to show it.
Absolutely.
Because it's been a like people stuck on until January 2013, and then they gave up.
Exactly.
Actually, the next one shows it probably even better.
Yeah, this is like global ETFs.
Yeah.
So the chart before was just the GLD, which is like listed in the States.
Yeah.
And this is like global. So the total amount of gold held by global ETFs is down about 20%, 25% sort of from the highs.
Yeah. And no wonder gold is down.
Which is, yeah, exactly.
So this is possibly the biggest, because the biggest demand is still jewelers and all these things. But we actually do have a chart somewhere of that, but I don't have it handy. But the biggest demand, something like, I'm taking it off the top of my head, something like 80%, or maybe 70% is like natural demand for shiny stuff, and then maybe it's even 60, but it's a big number, and then but that's kind of a static number. Gold is not particularly fluctuating, and then you have the central banks, which is maybe 5% or 10, something like that, and then you have this like whole like huge chunk, which is speculation, using financial products like GLD, the ETF. And it's just interesting because that's effectively what drives the price, because these other things are fairly static, and they've been static for decades, for hundreds of years, and or at least they're not fluctuating much. You see some fluctuation in India and China, but still it's fairly like a stable thing. And it's just interesting when you see something like these charts here, and you see just a massive sell-off. This is it's devastating for the price.
Yeah.
Do you think these people could come back?
I mean, it's possible. A lot of the demand for gold is like driven by emerging markets. So I think we'll have to sort of see what's going to like happen there, sort of in the next few weeks, next few months.
Yeah, but do you think that all the trouble there could force people or
well, it's
convince
always
people?
been, in that part of the world, in Asia and India, it's always been like an alternative to pay for assets and keeping money in the bank. If you wanted to, you held your savings in gold.
Yeah.
And there's a long tradition, and these old habits sort of die hard. So
They really do.
We'll see.
But I'm pretty certain that you need a big ramp up to convince these people who recently lost 20 to 50%, depending on how levered you are, to come back permanently. I remember distinctly the top. It was a moment, a day. I can pinpoint that day. When did gold top?
When was it? In 2011, no?
Yeah, it was 2011, but this was not the top day, but it was a few months, because I think it was something around summer 2011. Let me check that out.
Yeah.
So if you see, I'm going to pull up my in front here. By the way, let's give a big...
a lot of the run-up was like, people speculating that QE was going to be massively inflationary.
Yeah, and it hasn't. Well, not so far, at least.
Yeah.
And that's interesting. I haven't thought about that, actually. That's
yeah,
part
I
of
mean,
it. That's probably
I remember sort of in 2009, 2010, the consensus expectation was that QE was just going to sort of create sort of this huge inflation sort of down the road, and so people, at least here in Switzerland, I mean, the private banks were recommending huge allocations to gold in private banking portfolios. Oh, yes.
In private banking.
Yeah.
So we had the top in, what is that, August?
Yes.
Here.
Like, yeah.
I'm not sure about the day here. We can do a little zoom in. So as far as I can tell, the top was, I'm using, so we topped around 1912, something like that, on the 22nd of August. And I remember distinctly, because I remember the meeting I was going to, and the cabbie asked me a question, because I was going to a meeting and I had a fairly big story. I was a journalist at the time, and I was going to talk to a chairman of the board someplace, and it was probably, I would say probably in February, and I was going over there, and I was so preoccupied. It was a big meeting, so I didn't, but I was kind of like jazzed up, and I started talking to the cabbie, and he said, and he realized I said something finance, something, and I have to ask you because I'm going to invest in gold, and I wonder, and then he started this spiel where he said it's going to go up 20% every year forever. It's kind of was his starting point, because it's been going up for 10 years. It's like something like 500% pop. And he said, so should I put everything back in, all the 20%? And I'm not mocking him, but that's kind of how the mindset was. This magical asset that has some magical ability that's been going up for so long will just continue, and that's going back to our bias, I guess, from the previous show.
Absolutely.
And that was just 4 months before, or 6 months before the top. So of course it's hard to have a exact top, but when the least sophisticated investors there are, like the average Joe starts buying, I guess it's, and that's, you can see that for GLD, I guess.
Sure. I mean, you also, I mean, the peak in gold is probably also sort of quite correlated to peak in like number of ETFs and structured products and other kinds of derivatives funds, all sort of linked to gold.
Yeah. Yeah, because there's money to be made.
Exactly.
How much money is there in an ETF like GLD? It's one of the most traded assets there are.
Yeah.
How much money is there in that? Do you know?
Hang on, I'm just going to look up the market cap on.
How do they make money? The people who I actually don't know that.
On a spread. Okay, let's see. The market cap
So
of
basically market
GLD is, it looks like 127 billion. Yeah.
Yeah.
It's big.
There was a case in the 90s, a Norwegian guy who's from the Fisherman Party or something like that.
Yeah.
He said we should buy gold with our sovereign wealth fund, and he was laughed out of the
Really?
the parliament at the time. It was literally like mocked to no end.
Well, there's going to be a referendum in Switzerland sometime soon. I don't think a date's been set yet about whether the Swiss National Bank, the BNS, should repatriate its gold.
Oh, really?
Yeah, because some of it
Really?
is held outside of Switzerland.
Wow.
Yeah, so.
But that's fascinating.
Yeah, we vote about everything here. So.
Yeah.
Yeah,
But
so it collected enough signatures, so now.
Oh.
Yeah.
But how would that work? Like from London, I guess?
I don't know. I mean, I haven't read sort of the text of the proposed referendum, and I don't know too much about it. But
yeah.
I think it's interesting, sort of, that the Swiss people, I'm not Swiss by the way, are going to be asked to sort of vote on this.
Can you vote on it?
No, I'm not Swiss. Can't vote on anything.
No. What do you think is going to happen with you recently had a vote there? I know you tweeted about it, that it could leave Schengen.
Yeah,
Have
yeah.
people talked about
Everything is up for grabs.
Yeah.
I mean, sort of now the hard negotiations start.
Oh.
Yeah. So.
But it could it affect something like arbitrary, or because of course Schengen?
Now what happens? The next step is that the referendum needs to be sort of implemented into law. So it remains to be seen, sort of, whether it's going to be watered down in any way, and exactly what's going to happen. And but it will definitely be quite tricky sort of negotiations for the Swiss.
Yeah.
Yeah. So.
Could this affect trade and GDP?
Oh, definitely. Free movement of persons, and yeah.
What about the Swiss franc? Fall more in favor or out of favor, or is it unaffected?
Well, the Swiss franc, as you know, sort of, there's the floor in place.
Yeah.
Or the ceiling in place, and the Swiss franc is pretty much sort of can't get any sort of stronger than 120. The BNS has been very successful in sort of defending the peg.
This is an incredible chart to look at.
Yeah.
It looks like a murder, like or somebody dying in a hospital or something. It's like the heartbeat. It's just.
Yeah,
but has it been successful? Because it's it's an incredibly controversial thing to do.
Yeah, but it has been successful. I mean, in the sense that the market has not been sort of able to breach this.
Yeah.
And to test it. So.
Yeah. So I think we're about land's end there.
Okay.
Well, thank you for taking time from
what
I know is your busy day to help us out here, and helping yourself out. I mean, you're owner of this as well. We're co-owners of this little network that we so ambitiously call Big TV. But we're gonna start doing this more. We're talking with Sebastian Galli. We're going to be doing him once a week, and we have a few other people. So we're going to
Yeah, and I think
test
once
it
we
out
can
a
do
bit.
like three-way sort of conversations, it should
Yeah,
be good as well.
yeah, we're gonna fix that by the end of the day. So
Good.
it's oh, and we have a new website. I want to show it off. So good. BigTV.io. I was yelled at today for not having the .com, but so here's our new website. It works on mobile and iPad and everything. And you click here to start the stream, which everyone has done. If you want to follow, our podcast is also on iTunes. This is the back end of the podcast. If you actually just want to like click to listen. And we have we're gonna do some more posts. So right now it's just a few posts here, but we're gonna do a lot of blogging. So
Yeah. Is there a way to sort of link our Twitter feeds to this?
yeah. So
Yeah,
we're
we should
gonna
do
I'm gonna
that.
put we're using, I don't know if you noticed, me and Ed, or Ed is using Pinterest, and we're creating these like photo. So if someone is interested in Pinterest, which is known for the complete, like not known for this at all. So we have a little account here for Fill or Kill, and whenever we add like a new episode, we add pins here. We have this is our first one with this system, and then our latest one is the trading bias. Here's the Pinterest board, and you can go on back and you can click either on links. We're gonna put the video up, and yeah, so it's that was a great idea from Ed to
Yeah.
so,
Yeah, no, this is really good because
yeah.
everything is all together in one place.
Yeah,
and-
exactly. Pinterest is hellish to work with, but so yeah. But anyway, I think we're about done for the day, and I want
Okay.
to thank you for taking time. And
Thank
we're
you,
gonna
and speak with you soon.
yes continue the stream now, but for the recording, it's over.